So for people that are really busy, they want to invest in real estate, but they don't necessarily want to deal with all that stuff. They don't want to deal with construction. They don't want to deal with property managers or contracts or renovations. You got to start looking at commercial real estate where you can give your capital to somebody and expect a return. And that's what a syndication is. Now, you still own that real estate directly as an investor in a syndication, and you get all the tax benefits that you would if you owned a single family house. It's the same thing. You just own a fractional piece of it rather than the whole thing. And in that regard, you don't have to worry about finding the property, financing it, dealing with the property managers or their contractors, or dealing with the construction or the tenants. You give those responsibilities to somebody else to do, and that's what you're paying them to do. And you expect a return on your capital. And again, you get all the tax benefits and appreciation that go along with owning real estate. So for me,
All right, guys. Hey, welcome to another episode of the Practical Wealth Show. So we're going to talk about passive income, creating financial freedom, passive income. So I have Seth Bradley, who is the host of the the Passive Income Attorney, right? Yeah,
Passive Income Attorney podcast.
Show. Right.
Well, you were just on my show, so it's all good, man.
Right. So I was just on his show. So I said, well, Turnbout's Fair Play. You got good stuff. I need you to come and talk to my people. So Seth, tell them a little about yourself and your journey, and let's talk about how you're helping people create passive income.
Absolutely, brother. Thanks for having me on.
Yes, sir.
I'll take it back pretty far because I think it's kind of relevant to a lot of folks. I mean, I grew up in a rural place in West Virginia. I mean, in the middle of nowhere, country West Virginia. In a blue collar family. My dad's a retired coal miner. My mom's a retired school teacher. So, owning real estate, investing in, creating passive income streams, starting businesses. It wasn't really something I was exposed to growing up. Unlike yourself, Curtis, I know we shared a conversation about that. So it wasn't something that I got involved with or that I was into at an early age. For me, I was always taught, trading time for money is just how you do it. You get the best job you can possibly get. So for me growing up, that was, I'm going to become a doctor because I was a smart kid. It's like, well, what do you want to do? Wasn't really interested in anything in specifically. So I was just like, I'm going to do whatever's going to pay me the most. So I'm going to become a doctor. So went that pathway, went to medical school for almost 2 years before I dropped out because I absolutely hated it. It wasn't for me. I knew long-term, it wasn't the solution. So I dropped out, didn't know what to do. In the meantime, I just wanted to enroll in something. So I ended up getting my MBA. And while I was getting my MBA, that's when I was like, okay, I'm going to take it the next step further and go to law school. Law school to me, I still had the same mindset. It was like, okay, well, I'm not going to become a doctor. So what's the next highest paying job I can get? I don't know if it depends on what kind of attorney you are. But to me, it was to become an attorney. So I went to law school. I did really well there. Graduated top of my class, got the big law firm job, did that traditional pathway. And at that point, that's when I had the same epiphany. I'm like, this is not fulfilling to me. This is not the way that I want to live my life. I don't know what's missing. But I did know that wasn't the long-term plan for me. And I realized that real estate was a great investment. So I started investing in real estate basically as soon as I started making money at a big law firm. I invested in a duplex that I house hacked into. My wife and I moved into one half and we rented out the other. Learned that idea from Bigger Pockets like a lot of people do. Read Rich Dad, Poor Dad, took that journey and just kind of moved my way up, started investing in different types of real estate. And now we're investing in large commercial properties. We closed on over $120 million worth of real estate last year. So
wow, that's awesome. How long have you been doing it? When did you start?
2013.
2013. Okay, so it's about 9 years, about almost 10. No, 10 years. 10 years.
10 years, man. Decade.
That is awesome. And did you transition out of the law firm to doing what you're doing now full time?
Yeah, I have. So, I mean, it was a slow transition. I mean, I stayed in big law for about 6 years. I went through a couple epiphanies there. Even though I was investing in single family real estate, 1 to 4 unit, smaller stuff,
Mm-hmm.
I was still kind of just meddling around, right? I was wholesaling some properties, I was flipping some properties, I was picking up some rentals here and there. But in the meantime, I was closing, $100 million properties for my clients,
Mm-hmm.
advising them on how to close, how to get the financing, all that sort of stuff. And I just, kind of realized what am I doing messing around with these small properties when I have the sophistication and knowledge and know-how to be able to do larger properties. So that's when I got kind of interested in doing, large commercial projects, and I started asking around and networking and trying to figure out what my way in would be. And everyone kind of advised me that if you want to start with something like that, maybe invest passively first. So I invested passively in a few real estate syndications, really loved it. Loved the returns, loved the value I got for my dollar, for each dollar I invested. And I love the sophistication of the deals.
Mm-hmm.
So, I always had the intention though of making it to the active side. So at that point I did start transitioning to the active side by, raising capital, partnering with people. And eventually I got my footing by partnering with folks by actually doing the legal work. So if we're raising capital, I'm doing the securities work. Obviously we're dealing with real property. So I'm doing the real estate legal work as well, and then
Right.
raising capital and doing my own due diligence and underwriting and that sort of thing as well. So that's really now how I partner with people. So even though I don't practice I don't give work to third parties. I don't bring in third parties just to do the legal work.
Right.
I do still practice as far as doing the work for my own deals.
That's the best way to do it. Okay.
Yeah, it's a
So,
lot better when you're doing the legal work for yourself rather than somebody else.
right, exactly. That's cool. And what was because a lot of people have that trouble making, well, you see it kind of ease into it, but mentally the switch from big, little to big, I find people have that, they're stuck at a certain level. And if let's say they're not fortunate to have a job where they're working on deals to kind of help them say, well, hey, I already know how to do this. What do you have you ever thought about, like, what if you were like a regular person? You are a regular person, but you know what I mean. Uh no, you're not, you're special, so a little snowflake. And how, how they would make that mental transition. You ever been asked that, or have any of your people that you're following that may be in a different area of law that want to move from little deals to bigger deals themselves, or do they really just like going in syndication?
Yeah, I mean it is a mental mindset shift, right? Like
Hmm.
I think it really takes exposure is the key. Just being exposed to larger deals, just kind of, maybe looking at some of the offering memorandums for some of these passive real estate deals where you're dealing with, 5, 10, 15, $100 million properties, just kind of getting comfortable with those sorts of numbers, especially if, your background isn't, as someone that's really wealthy and used to dealing with those sorts of numbers.
Hmm.
Just reading about them, learning about them, getting exposed to different deals. I think that's kind of step number one. It's just kind of resetting your mind to think, I can actually invest in these deals. I don't need $1 million to invest in a real estate syndication for a $50 million property. I might need a little bit of capital. I mean, it's still expensive. It might cost you 25, 50, $100,000. But you don't need millions of dollars to invest and get exposure to these institutional grade investments.
It's funny because that's why I see people. I always tell people, look, you ain't gonna get nowhere doing $250 a month in Robinhood. You know what I mean? Like
That's a
you need,
video game.
right,
Yeah.
right. You need to save money, right? So that you have, you know, you got to make money, because some of the stuff you need to be accredited. So you've got to, focus on getting whether you're in business or whatever, getting your money up. And but then you have to save it, and then invest in things that you have more, I guess. Like for you, what I find with people that are doing this, they really want more control of the assets. And talk about your principles, your mindset in regards of why you like real estate and compared to equities or that kind of stuff. What's your philosophy around that?
Yeah, I mean, I don't know. I can't actually pinpoint it at a certain period of time when I started getting interested in real estate, but I've just always been interested in. I remember being an undergrad and living in a townhouse that just got built, and there were like 4 of them. And I remember talking to the owner, and he was a young guy. I think he was maybe only like 25 or so, but I was like 18 or 19 at the time. I was like, man, how did you do this? How did you build these 4 townhouses? Like, to me, it was like this mind blowing thing. Like, this
Right,
guy's
right.
25 years old and he just built 4 townhouses. I'm living and renting one of them from him. It's crazy. So I've always been interested in it. But, as far as, nowadays, have a little bit more knowledge, a few more options. You can invest in tons of different things. You can invest in, precious metals. You can invest in stocks, bonds, mutual funds, that sort of stuff. I stay away from it. I mean, I love real estate. I love that it's a hard asset. I love that, I'll go back to syndications because that's sort of my specialty, but it's like,
Yeah.
underlying those deals, there's a very valuable piece of property. So even if the deal doesn't go great, you're still probably going to get your money back because that
Mm,
asset is there. Whereas if you
hmm.
invest in a stock, that company could go to zero tomorrow.
Right.
That company's stock can fluctuate with, how people feel today about, the federal interest rates and things like that and where they think they're going to go. And it has not a lot to do with that particular company or in what they're doing. So I hate the fact that, public sentiment can influence public markets like that. Whereas
Hmm.
with a hard asset, we're talking about real estate, you've got a very valuable hard asset that is always going to be valuable.
Right, right. I love it. Let me ask you. So this is a question I get from time to time. So I'm going to not answer. I want to ask to you. So I'll get this question. How can someone get started creating passive income even if they don't have a lot of money to invest? Is that a thing?
Yeah, I mean, it is. So, the age old thing that, it takes money to make money. It is
Right.
true to a certain extent, right? I mean, it's a lot easier to make money if you already have it.
Hmm.
I think the first thing you need to do is figure out how to find money, right? Like, if you don't have any money, where can you get it? Like, if you want to invest in a real estate syndication, or even if you want to buy, single family house and you want to rent it out, I mean, it's going to take some capital.
Yeah.
You might be able to use some different strategies to take an active role and raise capital from somebody else and not use your own money. But, that takes a lot more of an educational hurdle, how to do that, how to do it effectively, how to do it legally. So in my mind, most of the people that I talk to, the best thing for them is to figure out how to reduce their expenses and how to quote unquote find money. Now that might be in, a HELOC or something that you already in a house that you already own. It might be taking out, if you can find a low interest personal loan because you have great credit and you're taking it
Hmm.
out at, like, let's say 4 or 5%, and you're getting a, 15 to 20% return on a real estate project. Well, that's a pretty decent delta. You got to know what you're doing. I wouldn't suggest that without kind of educating yourself first, but you can take advantage of some of those deltas between how you can borrow money or find money versus, the investment that you're getting yourself into.
That's a great, yes, because you have to learn how to do it. Like we always say investing is about becoming, not necessarily about just buying something. And so you have to be more resourceful. You have assets, and then if you're working and you don't have any savings, then okay, that's a different problem we got to talk about, right? Because where's your
Yeah.
money going? If you look out and you've got a Bentley and you've got all these you know, what does Rich Dad call it? Doodads, right, and you don't have any capital saved up. Well, okay, that's a problem. You're, what's they call, big, what do you say in Texas, a lot, big hat, no cattle. And
Yeah. Yeah. That's
because you're right,
it.
and so you don't want to
Yeah.
be that person. We want to get you some cattle,
Right.
which is this is the property. And
Yeah. Yeah.
what do you recommend for, I know you're dealing with people that are already, what I would call have so I want to do two part. I want to talk to them, and but I want to talk to beginners. First question, how would you talk to them about, like, getting that? Do you get those type people in your community? And then also I want you to talk to not just attorneys, but I would say your market, would you agree, is more like, or similar, as like a high paid professional business owner that's highly compensated and doesn't have time to do all the running around and find their own deals. Is that kind of who you're attracting?
Yeah, yeah, for sure. I mean, my advice for beginners is to self-educate. I think you do need to make an investment into your education, whether you want to do that, and try to do it the free route through listening to podcasts like this, or YouTube, or, whatever it might be, the internet, you can piece that stuff together and teach
That's
yourself enough
slow,
to
but
get
yes,
by,
you can
but
piece
it's slow.
together, right? Yeah.
Exactly. It's slow. It's, discombobulated. It's not in any particular order. If you have the means to pay a little bit for an education, I highly advise doing it. I've done it myself. I've spent tens, if not probably tens, if not hundreds of thousands of dollars
Right,
on
right,
my
right.
education, on, these different things. And when think about, you'll spend 40,000, I don't even know what it costs to go to college anymore, but you spend 20, 40, $60,000 to go to college every single year, to learn about something that you're probably not going to be able to apply to real life, or something that you're going to use. It's just really to get a piece of paper to get you in the door somewhere. And then you're afraid to spend $5,000 or $10,000 on, let's say, a coaching program or a course that's actually going to show you exactly how to do what you're trying to learn how to do. It doesn't make sense. It's really kind of another mindset hurdle that you need to get over and you need to get used to. So I think for beginners, I mean, really self-education, in investing in yourself so that you can learn financial education, because they don't teach us that in
Yeah.
traditional
Even
schools.
let me ask you. So, don't forget the second question. But
Yeah.
now you just made me segue into
Yeah.
the MBA law degree. So, do you feel that how much of that stuff do you use today? I was a business major. I can't think of anything I use in college that I use in business today. And
Very, very little, man. I mean, very little. I mean, not anything that you couldn't have taught yourself for free, right?
yeah,
Like,
yeah,
how to read a balance sheet and a profit and loss statement, like that sort of stuff. That's pretty elementary stuff that you can teach yourself by reading an article or watching a YouTube video. That sort of stuff you use. But as far as like, the economics and, those sorts of things that are just, they're theory. They're
yeah,
theory based.
yeah.
They're not grounded in what you're going to be doing every single day, when you're evaluating a market or a deal or a person, their track record. Those aren't things that they teach you how to do in MBA school. Law school, it's really more geared towards litigators. I'm a
hmm
transactional attorney.
hmm
I do contracts. Sure, we had a few courses that taught us how to do those things and what to look for and quote unquote how to think like an attorney.
hmm
But I would say 80% of that stuff I've never looked at again. I've never thought about it. And if you tested me on it, I'd probably fail it because it was so long ago.
Yeah, yeah, yeah. My wife is like if she went on private practice and she stayed at the firm she was at, she wouldn't have been nowhere near a courtroom. And so she's just by practicing attorney, she's doing it, and now she's real estate and got her hands in the mix, and she's a really good real estate attorney, estate administration, just from working with clients, reading contracts, going to court, that kind of stuff. See, I don't care what you want to get good at, you have to do the thing.
Got to do it. You got to be in it. You got to do it. You got to practice it. You've got to live it. I mean, just reading a book or, thinking about doing something and not actually doing it is only going to get you so far. Again,
Yeah.
it's theory. Until you put it into practice, it's theory.
See, because one of the things like Seth is I want people to, and I'm glad you went through your background. I want them to see the journey, right? That they're and the work. See, people people they want to be I like looking at like sports and entertainers. I like, because they'll see the people on Instagram and all this stuff, but they don't show Tiger hitting 1,000 golf balls a day,
Right.
or Kobe shooting 1,000 jumpers a day. They just want the money, but they don't see the hours, the work put in, the study, that kind of stuff. And so they don't all that stuff, because this is like you're like a 10-year overnight success, right? Starting
Exactly.
out with your first duplex. You know what I mean?
Yeah,
And that's
exactly.
what I like people to hear, that you grow to this stuff, but you have to, what do they say? A journey of 1,000 miles begins with a single step, and you have to
Yeah.
move. And it starts with, reading 10 to 15 pages of a day of a good book, or listen to a podcast. But you got to get beyond that faster, because what happens is you got all these internet gurus out there that you don't know. I have people I have to like, all right, let me give you a pad. I'm gonna give you my recommended reading list so you don't waste your time,
Yeah.
running around all over the place with like a cat chasing your tail, and figure
Yeah.
out what you want to do and going forward. So anyway, okay, I'm glad you shared that. So let's talk about the other thing. I know I took you off. You triggered me, and I
All
want to
good,
get that
man.
point out. Yeah. So
All good, man.
let's talk about the second part, which was talking about the your people, like high paid professionals, the high paid W-2s that they want to, they like real estate, but they, don't really want to do all the work. And
That's
to
right.
what level, and because sometimes they may want to. So start with there, and then is there a point where those people actually want to be you, like the syndicator? Is that
Sure.
is that a thing? So
It
talk
does
about both
happen
of
for sure. Yeah, I
those.
would say, start out, it's, most intelligent people identify real estate as a great investment. They're like,
Mhm,
I would say almost unanimously could agree that it's a great investment. It's a good
mhm,
investment if you do it right. So, a lot of folks that are caught up in their W-2, they're really good at it. They're successful doctors, lawyers, engineers, what have you. They're really good at what they're doing. They are only exposed or given the opportunity to invest in, let's say, their 401k, their retirement accounts. They're familiar with stock, bonds, and mutual funds. And unless you're really in it, you don't really learn about real estate and how to invest in real estate. And
mhm,
then
mhm,
once you do kind of get that light bulb that goes on, you say, all right, I want to invest in real estate. I've got some exposure to the public markets, and now I want to invest in something else. Real estate looks like a great vehicle. What do I do now? Well, most people watch HGTV and they're like, okay, how do they do it? Oh, this looks fun. Let's flip a house, or let's renovate a 100-year-old single family house, or let's do some wholesaling, or let's do a short-term rental Airbnb, something like that. Because that's what you see. That's what
yeah,
HGTV shows you. Makes it look really easy. Well, it's not easy. First of all. Second of all, if you're really good at what you're already doing, if you're making $100,000, $200,000, $500,000 a year as a really successful person in your W-2 at a high-paying job, you have no business flipping a single family house in Cleveland or Charlotte, which those are the markets that I used to do it in,
mhm,
because you just don't have time and it's not worth your time. I mean, if you do a cost analysis of the time that you're going to put into flipping this house and maybe making 10 grand or maybe making 50 grand on it, compared to if you didn't do it and you didn't put those hours in, you just gave that money to somebody else to invest in real estate. It doesn't make any sense at all. And it
mhm.
took me a really long time to figure that out. I did the single family rentals, I did the fix and flips, the wholesales, short term rentals, all that kind of stuff. And I still do an occasional flip because my wife is an interior designer.
Mhm.
So I will say that caveat, but it's really more for fun. I don't love doing it. It's just something for fun. So for people that are really busy, they want to invest in real estate, but they don't necessarily want to deal with all that stuff. They don't want to deal with construction. They don't want to deal with property managers or contracts or renovations. You got to start looking at commercial real estate where you can give your capital to somebody and expect a return. And that's what a syndication is. Now, you still own that real estate directly as an investor in a syndication, and you get all the tax benefits that you would if you owned a single family house. It's the same thing. You just own a fractional piece of it rather than the whole thing. And in that regard, you don't have to worry about finding the property, financing it, dealing with the property managers or the contractors, or dealing with the construction or the tenants. You give those responsibilities to somebody else to do, and that's what you're paying them to do. And you expect a return on your capital. And again, you get all the tax benefits and the appreciation that go along with owning real estate. So for me, that's what I did. I started
Right.
investing passively in these deals. Loved it. I was like, wow, this is great. I will say that I know a lot more now about what to
Mhm.
look for when you invest in one of those deals than I did back then, which goes back to the self-education point. But it worked. It happened to work out really well, and now I've made my way over to the active side, which a lot of people do as well. They'll start out investing passively. Passively, they figure out that they love it, and they're like, "What can I do? How can I make it over to the other side?"
That's good stuff. Tell me about what you saw, what you've learned that you said it worked out well, but what are some of the things that people, if they're doing that, because that sounds absolutely wonderful. Because I'm lazy. It's like, oh, yeah,
Yeah.
I'd rather just build my business and Seth, here's some money,
Right.
and give me a
Yeah.
return on my capital. Because I know I can make my business make money. That I
Yeah.
understand that I can control. I put $1 and get $2. That's 100% return. But
Yep.
I need to put the rest of the money to work and then also keep my money from the tax man. So that's a beautiful thing. But what did you have you learned, maybe, I guess, what do about due diligence or selecting good operators that you
Yeah.
didn't know then that you know now?
Yeah.
Now
I
that
mean,
you're
I'll just
operator.
For sure, exactly. You have a lot more insight now, or I have a lot more insight now. But it's like, when you first start looking at deals, if you've never looked at them before, all you're looking at is returns, right? Like
Mhm,
you're like,
mhm,
okay, I'm going to get an 8% preferred return, or, I expect an 18% return over the 5-year holding period. You're just looking at numbers and you're comparing, well, you think you're comparing apples to apples because you're like, okay, this deal number one gives me an 18% return. Deal number two gives me a 22% return. I'm obviously going to take deal number two because it gives me a better return. That's how
mhm.
most investors, novice investors, look at deals because it's pretty obvious. I mean, that's what you would look at,
They're
right?
always chasing returns. That's the only
Yeah,
metric they look at. Yeah.
for sure, for sure. But then you learn that there's really three things you need to look for, and that's three things you need to do due diligence on, and that's the sponsor, the market, and the deal itself. Those are
Mm,
the three big things. Now, even once you figure that out, most people think that the deal is the most important thing. They're like, "Oh, this is a great property. It's a Class A multifamily property in Nashville. Something like that. That's really sexy." But it's not. You pointed it out. The most important thing is the sponsor. Who's
mm,
running the show? Who's the active partner that you are partnering with on this deal that after closing is going to execute the business plan as they say they're going to, and hopefully do a really good job and give you those projected returns that they promised at the beginning of the deal. That's the most important thing. So you've got to look at their track record. You've got to see what they've done in the past. You've got to see how those deals have went. Maybe potentially talk to some of their investors, or at least ask around to other people in their network to ask them for references. They should be able to give you some references. They should definitely be able to give you their track record. Ask them
mhm,
for what kind of deals they've done in the past, how they're
mhm.
performing, have they met their metrics in their projected returns previously, and really take advantage of some of the things they offer, which are, let's say a phone call. A lot of them will say, hey, jump on a call with me. I'll tell you about the deal. We'll talk about your financial situation, see if this is the right deal for you. Take advantage of that. Talk to them, feel them out, feel that gut instinct too. That gut will tell you a lot too. And
Mhm.
you'll be able to tell if they really care about their investors, or if you're just one other person with 50,000 bucks and they really don't care about you, or where that money goes. I mean, you need to take a real gut check and just think if you like them, because you're going to be going into business with this person for probably 5 years. I mean, it's probably going to be a 5-year partnership. So you need to make sure you even like this person. I mean, if you're going to be talking to them on regular basis, meaning, let's say an email or a phone call here or there, once a month, once a quarter, you should probably like this person to a certain extent.
Right. Even stuff like how do they communicate with you?
Mm-hmm.
And that do they call you back? Do they have a do you get like quarterly or emails, or like how often do you get communicated with when you're in one of those deals? Or is it just, hey, you get a check every what, quarter, every month, or depending on the deal?
Yeah, well, a good sponsor will keep that line of communication open with you.
Mhm.
It should be at least quarterly.
Mhm.
Usually at the beginning of the deal, it may be monthly, just while there's a lot of stuff going on with the property. Like there's a lot of units getting turned, a lot of renovations being done, a lot of you're hiring and firing people. You may get a monthly communication at that point. But typically quarterly is acceptable. If you don't get those quarterly updates, then maybe reach out. And if there's still kind of, that miscommunication where they're just not sending you updates and they just don't seem to care about their investors, that's a yellow flag. But again, if you're getting those projected returns, you probably don't care.
Right, right, right. I know. I think I appreciate that because I think people don't know what they don't know. So they don't really. I appreciate the detail because they don't know what to ask. It's like ask me any question you
Sure.
want to know about nuclear physics, right? When you say let's vet the deal, let's vet the operator, and so I appreciate that deal because I think we'll have some listeners that like that thing, but I never want people to just do stuff because you heard it on a podcast somewhere. You have to, what I want you to do, and Seth, what I always tell them, I say, listen, so I want to give you ideas. Here are things you can do
Hmm.
that are out there, out of the, kind of the whole, you have my two friends on your show, but the whole wealth outside of Wall Street mindset. So, but I want you to know that that exists, but you still have to do some work in terms of if it's not, because we always talk about the 3 rules of investing: invest in what you know, or invest in knowing. Okay. And
Yeah.
then I would add, this guy said, or we were talking about, alternatives and syndications, to invest in due diligence of good operators. That to me is investing in knowing, right?
Yep.
Invest in what you can control or influence the outcome of, and don't chase returns. So see, if you have a lot of money, dumb money, and you're still like most people look at their 401k and go, okay, well, this fund did, 14.5% last year, according to this, those little brochure I got. And I'm going to pick this one, this one, this one, and this one. And so if you're not careful, you can go and do syndications the same way. And you're still just looking at returns. And you already told them there's 3 ways you need to look at that. I mean, that was absolutely brilliant.
Yeah.
Seth, what didn't I ask you? This is my catch-all. Make sure I don't forget anything that you that I should ask you, or that you want to, get out, that you want to make sure that we don't leave off.
Yeah, I mean, my general thought is especially for folks that are looking to, diversify, I think, in their investments. I think you need to, the overall thing that I like to preach is control over your financial future, right? Like we tend to just, as W-2 employees, we just take our money, our extra money, and we give it to a financial advisor and we say, here it is. Hopefully you do really well with this. And when I'm 60 years old, you give it back to me and it's worth a lot more and I don't have to work anymore. Like, that's absolutely ridiculous. I don't understand why people can take something so important like time, and I'll call it time because that's what you have. That's what you're spending right now. You're spending your time and you're sacrificing time, and just give it to somebody else. Some random person who maybe just was a really good salesman from, Northwestern Mutual or wherever. And they sold you on this, and there's going to put it in a fund, and there's going to be a computer that automatically says 20% here, 30% here, 20% here, and then set it, forget it. See you later. Keep working, keep giving me more money, and I'll keep getting paid. And it's absolutely ridiculous. You need to invest in yourself, your self-education, your financial education, so that you can make better and wiser decisions about where to put your money and how to make your money work for you. And there's so many things out there. I mean, when you start getting into this investing world, that you'll discover just tons of opportunities on how to multiply your money that you had no idea even existed. I mean, we talked about syndications here, but I know you do some infinite banking, like those sorts of vehicles. Like, you don't know about those things until you get into that investing world and you start learning, and then your possibilities just really open up.
Yeah. And you realize it's not new. It's just new to you. Okay.
Exactly. Yeah.
And you just got to get in the world, and it's like, oh, all right. Well, where y'all been hiding all my life? You've been hiding out all my life. And so Seth, tell them about your show and the passive income attorney and what you got going on, and how they can follow you.
Absolutely. Yeah. So I've got a great podcast. It's called the Passive Income Attorney Podcast. It's geared for W-2 people that want to learn how to invest passively in different things, different vehicles. We talk about infinite banking. We talk about syndications. We talk about, even some of the things that I used to invest in. I'll bring in flippers and show you why it's not passive and it's completely active, even though you put systems on it. Same with short-term rentals and things like that. We'll bring those folks on, and have them talk to you, and then you can make your own decisions on where to invest your money. So highly recommend you come take a listen. And to find me, the easiest way is go to SethPaulBradley.com. That has links to all my stuff. We have a coaching course for W-2 folks that are looking to invest passively and learn how to do syndications the right way, how to vet the sponsor, the market, and a deal. It's called Passive Income Pro. And then for the active investors out there, I am a securities attorney. So Syndication Shop is where you can find institutional quality offering documents at a fraction of the price.
Good stuff. I didn't know that part. Okay.
Yeah.
And so because you want to build your, like, investing is a team sport. So if you want to do that, now you got somebody that's in it, that understands it, that can kind of guide you through that. And you may need that. Well, he's not going to be your team because he's not practicing like that, but he'll give you a little bit of help and get your documents together. But that's fantastic. So listen, definitely follow that. I didn't know you had a course. The course would be awesome. And listen, I want y'all to move with the speed of action, and so if you see stuff that resonates, you follow him. You don't need to be an attorney to listen to the show, because what you want to do is, if you make some money and you want to do real estate passively, obviously you've got an expert that we've brought to you on the Practical Wealth Show. And yes, this has been awesome. Seth, thank you so much for doing me the favor coming back on my show. So I knew you'd be awesome, and you were. And so let's stay in touch. And Seth, thanks again.
All right, brother. Appreciate it. Thanks.
All right. Thank you guys. Listen, if you like this episode, I want you to leave me a review. Start with that, right? And share it and go out there and make it a profitable day. And definitely check out the I keep wanting to say the Practical Show, the the passive income attorney. And we have a great day, everybody.